following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related. A little bit of insight, a little bit of education, a little bit of strategy, and perhaps, on occasion, a dash of entertainment. My name is Mark Longo from the OptionsInsider.com, as well as the ever-expanding Options Insider Radio Network. And I'm very pleased to say we're actually having a very rare treat today, listeners. We're doing a live version of the Option Block where we're all together in the same room, except for one glaring omission. So it's very fun for us to have everyone together in the same room. I'm joined, of course, by the usual members of the All-Star panel, starting off all the way down at the end of the table to my left with the man holding down the Options Express hot seat, good old Alex Jacobson himself.
Good to be here. All Apple today.
Yes, all Apple all the time. There's that little fruit company who once in a while makes some news, and they made some news last night. Speaking of Apple, we also have joining us via the magic of telephone. I'm not sure if you've heard of this amazing invention we have here, Alex. But joining us via the magic of telephone, he was too busy to join us here on the live show. Good old Uncle Mike Tusaw, still beaming in, as always, from lovely and scenic St. Charles, Illinois. Uncle Mike, how are you doing this fine day?
Doing well, yourself?
Not too bad. And just for all of our listeners who are dying to know, how was the BBI today?
Not too bad. Not too bad.
Well, that's good to know. We'll get into the specifics.
I'm glad that an earnings report like this didn't happen 6 months ago. Then I don't think I'd have kidneys right now if such was the case then.
That probably would have been a much more frantic scenario when you actually had some significant deltas on the line versus now when it's more of an interesting event to observe and play around with a little bit.
That is correct.
And last but certainly not least, the man who flew in all the way from Atlanta just to join us today. Good old Mark Sebastian from OptionPit.com. Mark, welcome back to the program, to you as well.
How dare you imply I'm not least? What kind of jerk are you, Longo?
I was trying to give you that pride of place, but
yes, thank you.
You will deny
I am
yourself even that.
Absolutely the least, and I enjoy my place as the least.
Well, now that the order has been established, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block.
Bing, 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 bing.
Thank you for that. Those are the joys we get, listeners, when we do the show live. And it was indeed an interesting day on the street. I think most of the action a lot of people were watching was, of course, the pronounced sell-off that came in from Apple. They were trading, I think, 514. They closed yesterday going into the announcement and promptly sold off in the after hours, almost 60 handles. I think at one point they were trading. Well, how low did they get today, Uncle Mike?
Around 448, I think, is the low, and that's where it's at right now in the market, in the after-hours market.
Yeah, it dropped about $65. This was a really, really ugly day for
Apple.
Apple.
Where did the straddle go out going in?
$35.
There you go. We should call up Don right now and say, look, don't sell it, and maybe buy it.
And I was going to, I mean, the big thing, and this is a theme that we're seeing for earnings season. The entire time, and this is something that I really kind of saw happening. The JCJ, which is the CBOE correlation index, and it kind of takes the implied volatility of the 50 of the bigger stocks in the S&P 500 and correlates their implied vols to the SPX. It's at kind of pre-crisis lows. The VIX curve, the VIX futures curve, in February, before we knew that Congress was going to get their act together, February vol was already absolutely in the toilet. Everything we were looking at was saying, you know what, the indexes are not going to give a hoot about earnings season. Now, at the same time, we're consistently seeing stocks break out well beyond their straddle. Last week, General Electric, Intel. This week, Google beats their straddle. Netflix, Apple.
Premium buying season.
The theme, the theme is sell the index, buy the stock. That's where the vol is. That's where the vol deal is. S&P vol continues to be crazily overpriced. And you're saying, 12.5 vol, how's that overpriced? Well, realized vol's at 4.
That's exactly what I was saying. And that voice as well.
In the voice Longo makes. So my whole point right now is that consistently the classic retail move, and even the classic kind of mid-tier institutional move, is to sell premium into earnings. That makes a lot of sense if you're doing that on the index level. I would not be selling straddles in large cap stocks that have quote unquote buzz into their earnings.
Yeah, that certainly has been like the theme of earnings season so far. We talked about that on some of our shows earlier today, just how overall, you're right, realized vol in the indices is non-existent, but on an individual name basis, we're seeing just some explosions of vol across the board. Uncle Mike, how have you fared? I know we've talked a lot about how your repositioning in Apple going forward here going over the past few months. How did you fare going into this earnings, and what's your outlook going forward here for Apple?
No, with Apple today, one thing that I've been debating on wanting to get back into Apple since 560. Just full disclosure, I have probably about 20% of the deltas that I once had in Apple in terms of going into this earnings announcement. It's not something that I've viewed as like a AAA buy by any means, but what's been attractive to me has been the volatility in selling puts or put spreads below where the current price of it is. So going into the earnings announcement, I was in the 485, 455 bull put spread. And in terms of the outlook on it, I know that Sebastian and I were talking a little bit before the show. I'm not convinced either way whether or not it's a buy or a sell right now. I want to see how the price action fares tomorrow. I like Apple as a company, and I like it as a long-term play, which is one with which the whole reason that we wrote it up in the first place. But at this point in time, I'm not quite sure exactly what I want to do with it. I want to see more of the price action tomorrow as to whether I'll get back into it or just take the small loss and move on with things.
Somehow I don't see you washing your hands completely of that fruit company. I think it's always going to be on your horizon, at least for the foreseeable future.
Well, and that's the thing I'm looking at. There's ways with which I could roll down the put spread right now or just take a loss and start over again. Not sure quite yet, but tomorrow's when I'm going to make a decision on it, just because of the fact that we opened around in the upper 450s. And so during the trading day, yes, it was down money, but most of the bleeding happened in pre-market and yesterday in the evening, right after the earnings announcement. So curious to see tomorrow if the bleeding stops or not, and if the bleeding continues, then it's really not going to hurt me too bad because I'm long the 455 put to hedge my 485 put.
Another example of why it's always good to have a little hedge in your back pocket for days like today.
Yeah, you're not always right, I've found in trading.
It's amazing how that works. Have some long units, as they used to say on the floor, is always a good thing in scenarios like this. Alex?
Mark and I were talking before the show started that to the people out there who had positions in Apple or still have positions in Apple, one important point to make here is the stock went down, but the vol went down. So a lot of option investors have this kind of embedded in them that vol goes up into earnings and vol goes up when the stock goes down and vol goes down when the stock goes up. It's interesting here because I would have thought, given the size of the move, that the vol would have held a little bit, but they just drained the vol out of it today. I mean,
it's kind of odd because last earnings cycle we saw a similar. The move wasn't exactly favorable for Apple, and yet they did exactly what you're describing. They kept the vol in.
Yeah.
And if you recall, actually, that was on the Friday before the hurricane hit. So it was probably about the worst timing you could have had. A lot of guys, a lot of professionals should have known better that I was talking to who were very active in Apple. All said the same thing. Wow, this vol didn't really come off. I'm going to be an idiot and keep it on my sheets short going over the weekend. Yeah. Even then, when they knew a hurricane was coming, of course, fast forward a couple of days, the market stayed closed till Wednesday, and it didn't exactly work out too favorably for a lot of them.
Yeah, but this is a good point. But this is one of those environments where the novice trader has the tendency to make the call to the help desk that says the stock went down and my puts didn't go down. What the hell is wrong? And we always talk about that. When that happens, when your stock goes up and your call doesn't go up, or the stock goes down and the puts don't go up, the first conclusion you draw is that market makers are felons.
Yes.
Right?
Well,
which is a separate issue.
That's a mutually are absolutely mutually exclusive.
But it's important to understand, and I know we've all said this on the show repeatedly, but if you're right about trend and wrong about vol, your trade's going to underperform, and your trade can lose money. If you're a short-term trader in options, and short-term is getting out before expiration, it's not 1 day, 1 week, 1 month. It's getting out while there's still vol premium in the option. But if you're right about trend but wrong about vol, your trade's going to underperform.
That's kind of the inverse, or the opposite side of that same coin we talk about all the time. That probably is the number one options question. Stock goes up, my call didn't go up. The put, that's you talking about the other side of that exact same coin. Not as frequent, but still in days like today, I'm sure. And what was the tone over there on the trade desk? You talked to those guys today. I'd imagine A, overwhelmingly Apple. B, a lot of people probably maybe Netflix too. A lot of people were writing out of the money put spreads and condors in Apple.
How did Icon know to start selling puts when Netflix got to $70?
Smart man.
Yeah. I have a 10% position.
He just knows.
Oh yeah. They're gonna close all these deals.
It's curious.
Oh yeah. MoveOn.org.
Most of our premium selling is puts on the OX desk, and the numbers have gotten up to the 8.5 to 1, 9 to 1, which is pretty much the extreme. And there are a lot of people who look at option ratios and say they're contrarian indicators. I'm not one of those folks. I think there are just some natural tendencies in the marketplace. But the stuff that was going on today was Amazon, Facebook closing over 31. To Mark's earlier point, everything is hitting new highs except Apple. Big news today was Google up 12, Amazon up 5, vol coming in on stuff. So everything else looks like it's a continuation of the bull market rally, and you'd expect vol to go lower. Apple today was a contrarian, took the NASDAQ down, took Apple down.
Well,
but
we actually had some. Did you watch kind of what happened with the VIX kind of midday today?
A little bit.
It was really interesting. We actually saw the VIX. If you watch the VIX,
VIX was up today.
It went from down. Well, no, it was up big at one point in time. So the S&Ps went from up about 7 to down about 2 to up a couple of points at the end of the day. But the VIX went from down on the day to up over a point at one period in time, trading 1340. The VIX futures rallied almost a point, and then the VIX fell right back down to only up 30 cents. And the VIX futures went right back with it.
Technical term for that?
Yeah, that is. It was really interesting watching. I think this shows you how into the market a lot of the big institutions are starting to get now. Because anytime we see these pauses, the VIX is, we see a slight pause at 1,500, and we see the VIX really start to get a lift as you're seeing people come into the S&Ps and buy up premium. Now, those people would be much better served doing it in the equity market, as we just discussed.
That's your cause celeb these days.
That was the actual interesting thing. And, I just got this email. Believe it or not, on a day where things were really, really slow, 4th biggest volume of VIX futures in CBOE CFE history today.
I believe it. I was talking to the CFE guys earlier today, actually, on one of our other programs, and it is surprising how, of course, all of last year, a very bad year from a volume perspective for the options business, down about 12%. One of the few real highlights there was the CFE and the entire VIX suite continuing to set new records, even on days like today. On odd days, you might not expect it. And, of course, overall, for a long time, the narrative for VIX and VIX futures and options has been similar to the rest of the market in that it kind of followed the volatility level. General volatility levels overall in options are good for volume. Lower levels are bad. VIX, same thing. VIX at a higher level tended to generate more trading activity. We saw VIX for most of last year hovering at the lower end of its range, and yet it was setting new records across the board. And I was talking to them about why they thought that actually was. It's kind of a surprising result. And they kind of talked about all the usual suspects, a lot of new ETNs driving volume, and a lot of people getting more sophisticated and doing things like dispersion trades and vol arb against the S&P. Even in a low environment, you could still make money and also just drive a lot of volume to this product.
And I think that, and Alex, stop me if you disagree with me.
I disagree.
That's what I say. Stop.
I think
stop right now.
Especially in the lower, in a VIX where it's well below kind of its long-term mean. My understanding is they're seeing some decent volume on the upstairs desk in the OTC swaps, and there are two ways to hedge OTC swaps in the regular market, and it's either spending an hour and a half pricing a cash spread in the SPX, or you can take off a serious amount of that risk trading the futures. Now you lose some of the kind of the exponential behavior trading the VIX futures, but you can hedge off within some of the range a decent amount of your Vega risk on a swap.
So one of the benefits of being at a firm like where I am, Schwab OX, is we have this big base of customers, and we just came out with some of the December sentiment data, and one of the things we saw in December was customers leaving the market out of fear for fiscal cliff. Another thing to realize in the retail community, in the individual investor community, the brokerage houses have driven the customers to the ETNs and the ETFs. They don't want them trading the straight up VIX product because of the confusion about settlement. So
and the fees associated with trading the VIX product be my bet.
Yeah, a couple.
Because that if that's what brokerage houses are doing, then brokerage houses are acting like wildly irresponsible. Because
hopefully not pointing them towards TVIX.
I'm not. Because things like TVIX and VXX and UVXY and all those are pieces of crap. They are cute little, dipped in silver pieces of junk that don't hedge volatility risk. And the few products that actually, there are a couple of ETNs that aren't horribly built, and those don't have even any activity. Nobody's really figured it out right. I don't get why, other than the upstairs brass not understanding the product as well, which I know wasn't the case in your it's a simple
answer.
But
it's not an issue of understanding. It's an issue of massive unsecured debits when the market moved in 2008, and brokerage houses left holding the debits, who looked at it and said, forget it. You want to trade this, you're going to do it via the ETN, you're going to do it via the ETF. It's not a pure play, but we're not going to put ourselves in a position like that again. I don't think there are many retail houses that will allow you to spread the VIX option outright.
Yeah, no, and nor should you. On a margin account, but
that's what it's not even a margin issue. It's an unsecured debit issue. It's a misunderstanding of the settlement, and the attitude in retail is it's not a retail product. If you're a retail investor, you want to hedge with it, go to one of the ETFs or the ETNs.
Actually, it's funny you mentioned that.
What do you know? Just out of curiosity, what ETF? You get a lot of looks at this. If someone was looking to hedge, what ETF would you point?
Typically steer them towards?
I'm not making a specific recommendation.
No. I know. What I'm saying is, when you've heard the houses pointing people toward, what ETF do you use? The best one I've seen is XVZ, and that's a mediocre. It does some things kind of to prevent some of the roll problems. Carries kind of a weird weighting where it's rolling front month It's running XIV in the front, small in the front two, but running VXZ kind of in the back month, so it turns into a net long vol play. But I don't know. I mean, what is your solution if I'm looking to hedge volatility? What are the solutions, the available solutions that make some sense in the ETNs? And there aren't that many.
In the retail community,
Yeah.
you're going to have to cipher it up yourself.
Yeah.
Or turn to an expert like you, but you're not going to do it using the VIX option or spreading the VIX option. It's simply, there aren't many people left in the retail community who want to host those trades.
Speaking of spreading off VIX, like I said, I was talking to some of the CFE guys today. One of the questions I put to them was one we received quite a bit on the site here. They've created a lot of interesting, somewhat esoteric products in quotes that they distribute over there, like the idea for single name VIXs on an Apple, things like that, the SKU products, things like that. So I put it towards them, when are we ever going to see any of these in an actual viable tradable product, perhaps with the requisite VIX, Apple VIX future and things like that. And he pretty much said they've been putting that out there for a while, and they kind of like the problem they had with VIX in the early days. They can't find anyone to make markets on that.
I actually had this conversation with one of the development people at CBOE, not at the futures exchange, and we were walking back from lunch, and he said to me, well, you used to live in the institutional community. Do you know people who use single name stock vol products? And I said, yeah, but most people don't, because they're not in the traditional mainstream pipeline of option users. They're generally people with concentrated positions. And in the concentrated community, the use of single name vol is enormous. It's enormous because they've done their collars. Yeah. Wall Street has peddled them their collars, but again, I can't name names because
just between us, Alex. There's no one else. There's no one else here in this room.
And 100,000 viewers. Look at the VC firms that took the companies public. They don't necessarily hold the portfolio, but their client base holds the portfolio. Mm-hmm. And in many instances, they're still giving counsel to the client base. And the client base, in the end, is everybody from pension plans to endowments. And the market for single name volatility there is significant. It's not active. Much like VIX in the early days. I mean, we had VIX at CBOE for 10 years before we ever listed.
It wasn't even a product.
Right.
It was just an abstract index, like everything else over there is now.
And we talked about it on one show, and I said, these guys didn't want to trade it. These guys immediately got emails. Why are you dissing these people? In fact, I got one from Andrew that said, why are you putting down my old boss? I said, it's not what I said. What essentially they said is, we don't want to sell it when it's 6 or 7. And we're going to be the ultimate seller when it's 6 or 7. We're more than happy to trade it. And of course, we would sit there, and the research people at CBOE would sit there and say, you can hedge it with straddles, you can do this. And they'd look at it and they'd say, we're market makers, you're research. Go pedal crazy somewhere else. Right. And the thing that made the VIX viable, all of a sudden after all the years, was the futures exchange. And now that you've got robust trading on the futures exchange, and you've got real customer paper in there, you've broken the catch-22. Mm-hmm. So in terms of single name stuff, you got to go out to the big concentrated names. You got to go out to the perpetual holders. The perpetual holders are the endowments and some of the quant shops who have a lot of this stuff and who, in fact, are very savvy about vol and very sensitive about vol. But I've had that same conversation. And as far as I know, the product is not one that's in their forefront. We use it every day at Options Express because we use it for the price discovery.
By using the Idea Hub.
For how to position the spreads on Google, Apple, Amazon, the XLE, and the XLF. Back to kind of the second-tier sophisticated investor, there's an enormous amount of price discovery in understanding volatility. And back to what we talked about right at the beginning. If you're right about trend but wrong about vol, it doesn't work.
Right.
It doesn't work.
And those indexes are great for retail traders that maybe don't have access to some of the crazy analytics that we have. That some guy off the street, he wants to, well, how do I know if Apple vol is cheap or expensive, they can pull up VXAPL.
Yeah.
And they can use these indexes to their advantage.
And here's the thing even a retail trader should do. If you're at a discount broker, if you're at Options Express, you're at Schwab, or for some strange reason...
Options Express isn't a discount broker. It's professional brokerage services at discount prices.
Thank you, Mark. And you don't get a shirt
from the
for
marketing
that.
from the marketing arm of Options Express.
Send that man a T-shirt.
Yeah, there's no more T-shirt room. It's been turned into a compliance office.
Isn't it that?
That
isn't
old
that the way?
closet's an office
Isn't
now?
that the way it always is? They take your T-shirt and turn it into a compliance office.
Yes.
Yeah.
Everything. Everyone's. Where's my T-shirt? On a compliance officer.
Where's my option pit?
Who stole my cheese? Compliance.
Yeah. So if you're a retail trader, the great thing about what resources are provided today is you can get all this volatility information. And what retail traders should do is every weekend go price the vol at the money straddle. And if you're really technically proficient, put it in a spreadsheet. And what you will develop over time, even if you don't have a position, if you're someone who's looking at Amazon and saying, I want to trade Amazon one day, but I had the experience where I bought an option, it moved the way I thought it was going to move, and I didn't make any money, and now I'm upset. What we all would say is, well, you didn't understand volatility. In fact, you made the wrong trade. And you, in fact, may have made a trade that had a very low probability of making money out of the box. So if you don't have professional grade tools, here's what you do have. Every brokerage house today will give you the ability to capture the implied vol, or you can use the 16 or 17 CBOE products that are broadcast as real-time quotes. Every weekend, write that number down. Write that number down. You want to put it in a spreadsheet, put it in a spreadsheet. You want to, write it, in a little book you carry with you. And here's what will happen over time. You will develop what I call a Goldilocks view of volatility.
It's like
hot,
Mr. Sebastian right here.
Yeah, too hot, too cold, or just right. And you will know when the stock you've been watching, the day Amazon misses, and this is not a forecast, the day Amazon misses, and they take it down.
There you have it, folks. Alex Jacobson. Amazon's going to miss.
Yeah,
Long your straddles now.
There we go. The day XYZ misses, two guys in San Francisco just went, oh, thank God. The day XYZ misses, they take it down 20 points, and they double the vol, right? You buy the out-of-the-money call because you think the market overreacted, right? The next day, the stock goes up $6, the vol comes down, your call loses value. If you had sort of that Goldilocks sense of volatility, before you bought that call, you would have said, holy smokes, that thing is at a volatility level that, I haven't seen. It's in the stratosphere. Instead of buying an out-of-the-money call, which is the instrument that's most impacted by implied volatility, I might have bought a call spread. I might have sold a put spread. Get this, I might have bought the stock. There's no vol premium in stock. And every time I've said that, everybody looks at me and says, haven't you been selling options for 40 years? And you say, yeah, but here's the secret. It's not about how to get rich. A lot of it's about how not to get poor along the way. And if the vols are inflated, I want to buy something that is least reactive to a decline in volatility. What are the things that are least reactive? Stock doesn't have a vol premium. In the money options, not much of a vol premium. A debit call spread, by selling the little one, I wash a lot of the vol out. There are a lot of answers. A lot of people will automatically click and say sell the put. Again, not everybody who's suitable to buy out of the money call should be selling puts. But a good understanding of vol is the key between an okay trader and a really good trader.
That's what we've been saying on this
agree.
show, probably from
AJ.
the first episode. And I think with that salient advice, we're going to close out the trading block and dive into an abbreviated odd block segment.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All All right, and welcome to the Odd Block. This is, of course, the portion of the show where we dive into the interesting and or the unusual options activity that was lighting up the old tape. And as always, you can find more information on all of these alerts and play the home game by following along at theoptionsinsider.com, where we have all of these alerts and much more in much greater detail on the site. So, Mark, I know your partner in crime, Andrew, likes to send us a lot of great unusual activity alerts. I see he pulled up some interesting ones today, including a big size call spread going up out there in CBOE. So maybe we'll start there in CBOE land.
Yeah, I don't have the CBOE one in front of me. The CBOE one but I did see.
I said the CBOE one.
No, I know what it. But I know what that was.
Here, read
the
this
CBOE one
one.
Was a rollout. What the CBOE, the guy did, I believe he sold the 32 and a quarters and rolled
in March,
up and back to the 34 and a quarters. It's clearly a bullish trade. The guy was basically taking a winner and rolling it out. I think it's interesting in terms of CBOE.
It's totally a game on the stock's been pumped up like mad of late, given all the post ICE NYSE debate on trade. This, of course, CBOE, obviously the next low-hanging fruit from an exchange acquisition perspective. I've been on the other side of this trade for a while. I've been trying to roll down on some bearish risk reversals and things like that. They worked out for a while, and then I put some new ones on, and they have not worked out as well.
They're getting near the point where the higher it goes, someone was mentioning that. I think
10% in the month.
Yeah,
new high today. 30.
I heard somebody talk about it. As it rallies, it becomes a better takeover target because they're not convinced, because the CME is no longer convinced that it can get it for dirt cheap. And I'll tell you, with that VIX volume, 182,000, that's more than like the corn contract. That's more than wheat contract, some of the other major ag contracts. So the VIX is now getting up that contract. Now you take and the CBOE's repertoire fits so well with the CME's repertoire, and the way the ability to take kind of those volatility indexes and apply them to actual things that you could trade on the CME and get cross-listing. I mean,
I've said it for years. There's a big wedge missing from the CME pie, and the CBOE fits so perfectly into there.
Oh, it's beautiful.
There's obviously regulatory other issues that go along with that make it a little
CME
less.
Most people don't know this, but the CME has a basically mothballed securities exchange. Like, they are a licensed security exchange that they don't have.
They just choose not to really use because they don't want to dive into the SEC fray.
They've literally just have it mothballed. And then this would give them a chance to have CBSX. There's your stock market. Give them CBOE. Give them C2. Give them the
which they just
and the CFE.
We didn't get a chance to talk about this. They just rolled the SPXPM to CBOE. So I even asked them last year. I asked your CEO last week at the event. I said, "What does that mean for C2? What is left? That was your one marquee quote unquote product for C2."
They're just gonna. I guess
they said, "Yeah, we don't know. It's kind of an insurance exchange for us, and that's a hedge. We can use something for it down the road."
They're gonna, what they should do is just, if the Miami Stock Exchange can exist for no reason, then C2 can exist for the exact same reason. Just go in and pull the NASDAQ model, and you'll do fine.
Yeah, that's all it is. It's a future proofing against whatever models come down the road. CBOE can use that for that, but there's no real trading products there right now to speak of.
So yeah, it makes sense. I'm guessing it's in the pit with SPX.
Yes, and on the hybrid too.
Yeah. So there. Oh, it's on the regular hybrid.
Yes.
Oh,
that's been the whole.
That's interesting.
That's the whole rub of it. They have a SPX suite now, which you can use in the pit and on the hybrid, and it made sense from the beginning.
I might start playing around with that SPX now that it's got some liquidity.
There you go. That's why the stock's rallying.
So that's and you know what, and it should rally on that. That's if they got that on a real hybrid system, that it might actually be able to steal some volume from spiders.
And the other big trade we were looking at today that Andrew was writing up for us was in Stryker. Actually, no, the stock.
No. I want to talk.
Oh, you want to go somewhere else?
Infinera Corp.
Oh, well, an odd block special.
INFN is trading up 37 cents to $6.82.
Super special.
Paper bought the April 5 calls in scattered small blocks for $1.80, totaling 5,311 contracts.
$1.80. Alex, that must just deeply offend you on a fundamental level. Someone spending nearly $2 for options on a $5. April?
Yeah.
It was April next year,
they're
right?
in the money. April next year, they're in the money. So they're paying about an average price of about $1.80. So they're paying about even money for the April calls. It's an interesting way to just get long the stock. I guess they provide digital optical network systems.
I guess if you see it as a stock replacement or alternative, it is cheaper, but still.
It's just great.
It's just atrocious.
It's an odd block special.
That violates so many core
It's an odd
principles.
block special. And then this was another one. Halozyme Therapeutics, down nickel to $8.30 today. It's trading at 1 month lows. Today, a call spread in Halo, the 7.5-10 call spread, traded $1, 4,500 times. Average volume was about 405 contracts per day in the name.
Is that because they're too busy shooting aliens?
I know. Open interest, yeah, it was. Open interest about 7,700. So this is a big buyer of the call spread. It makes sense. It's probably, it's a different way of doing a risk reversal on the trade. And, it's not a bad little spread. Now you had one that actually might have value to the listening audience.
Yeah, good hold. Everyone loves the little odd block specials we talk about too. But of course, Stryker, this is the name that makes a lot of medical devices. I actually know this name pretty well. I had some family who worked at this name for a very long time.
He was my favorite character in Airplane.
We saw a pretty sizable buy right going up today in Stryker. Of course, ticker symbol SYK. This name closed or traded around almost 62, 61 in the orders roughly today for most of the day, making a 52-week high for this name. And that is a fairly robust level for Stryker given where it's been trading lately. We saw someone coming in, putting on a pretty sizable, for this name at least, buy right. This is the name that's doing around a couple of thousand contracts a day, maybe on a good day. And you saw over 4,000 contracts going up in this buy right. The Feb 62 halves trading 75 and 80 cents. Of course, going up with the buy right, buying stock, writing the calls. So selling well over 4,500, almost 5,000 of these Feb 62 halves on this relatively near term, relatively at the money buy right. Interesting strike selection on this one. Interesting stuff going on overall. But was this one attracting you at all?
Not a big. It's not one I have a strong understanding.
Yeah, the medical devices, unless you're really,
it's a weird one.
It's no Chico's. I know Chico's is really up your alley.
No,
a buy right in Chico's would have you excited.
Chico's is pronounced Chico's.
I know if it was Chico's, it would get you interested, or perhaps Darden restaurants. But
Darden restaurants, yeah. Well,
medical devices not your strong
point. I don't
point.
trade Darden, and I'll tell you, and you know why. I hate the company so much that I can't look past their horrible Italian, horrible seafood, and although interestingly, as I've said, I do like the Capitol Grill.
Oh, well,
which is owned by Darden.
Kind of the higher end of the Darden chain.
That's like,
I don't really equate that to Red Lobster.
That's like saying I like Cadillac and I like the Chevy Aveo. It's not exactly the same.
Interesting size buy right going up in Stryker today. And that's probably going to close us out for this abbreviated but still interesting. A lot of odd block specials today in the odd block. But that's going to close us out for the old odd block. And now we're going to roll right into the around the block segment.
Around the block.
All right, and welcome to Around the Block. This is, of course, a portion of the show where we peer into the future and attempt to divine what the markets hold in store for us and tell you, the listener, what we're paying attention to for the next few sessions going into the weekend. And Uncle Mike, it's been a tumultuous week for you, very low BBI overall. So what are you watching going through the rest of this week?
Well, tomorrow I want to see how Apple reacts and kind of the follow-through just to see if I am going to take some more positioning in it or not. Well, tomorrow I want to see how Apple reacts and kind of the follow-through just to see if I am going to take some more positioning in it or not. Right now, it's one where I still want to wait a day to see how the market reacts to it tomorrow. Other things I think are at key levels right now. The Russell 2000 is right at 900. It's at kind of a key number, so to speak. It's at a nice even number. S&P at 1,500 and the Dow approaching 14,000. I'm just curious to see what happens at these levels. Microsoft, I believe they report today. Haven't seen the announcement on them yet, but curious to see how they react over just
and
continuing
VIX
to watch
futures
the
and VIX
market.
cash. Certainly, the movement out there really seemed to occupy you a lot today.
Yeah, I think
almost like an equity. What's going on out there these days?
I know. Well, I think we're going to see some convergence between the cash and the future here, and I've been kind of expecting cash to creep a little higher and futures to continue to kind of their drift down. I think earnings are, there's some interesting earnings coming out in the next. Amazon's going to be one I think will be a fun market driver, and then after that, I think it's going to be a slow
period.
A slow
the midwinter summer doldrums.
It's going to be a slower period from our slower period. But I would steer people hedge with your actual underlyings instead of with the S&P right now. Just the way it is.
That's where the vol is. That's where you're looking to hedge your exposure. That certainly seems to be the smart play right now. Mm-hmm. And last but certainly not least, Mr. Jacobson, what are you watching for the next
I think we established I'm least.
That's right. You are the least. So last. He's not least then because you're the least. So therefore he would not be the least. So that was actually correct.
Just last.
Just last. All right. Last, Mr. Jacobson, what are you watching for the rest of the week going into the weekend here?
I'm in line with Mike and Mark. I mean, vol. Cash vol is tiny. I was home Tuesday watching Bloomberg, and they did a presentation on cash on the Spider is 5, and the VIX is still up at 13. Those kind of discrepancies don't exist for long periods of time. Even though we've had them for a while, very low levels of volatility pre-seed events. We always kid that I'm the old guy in the room. Every large event I have ever seen in the market comes off what in hindsight is a historical low. And we're bumping on lows in volatility. So, to Mike's point, you're taking on all the highs on the indexes. I don't think we're going into a quiet period in the market. Public was out for fiscal cliff. Public was out. It looks like we may have a budget deal now. At some point, the public's going to come back in here. Rates don't look like they're going up. The 10-year has come in off its high. There isn't a lot of place to put money here, and if this market continues to run, it's going to get a tailwind from the public coming in.
I heard someone saying this afternoon on one of our shows, only half jokingly, that Bank of America is starting to charge you to deposit money with them. So there you go. We're in the wrong racket, all of us. Obviously, banking is where the money is, perhaps.
Yeah, no kidding.
Or perhaps not. And before we go, I want to check in with all my cohorts, my partners in crime here, to see what they have coming up in their respective necks of the woods. Before we go, Uncle Mike, what is coming up in the land of KYO/RCM?
Webinar trains are running starting on Thursday, the 31st. We have a slippery webinar. The webinar is going to be titled Oil. Kevin Davitt from RCM. He's going to be.
Can we expect that quality of pun throughout the entire webinar?
Yeah, and then eventually, the other series of webinars, we're going to do something called Shiny for gold, and then. I don't know what we're going to do for livestock.
So high-quality puns is what you're promising our listeners.
Yeah.
Tune in today.
I know what you're going to do for livestock.
That's a crappy idea, but anyway. But yeah, tune in on Thursday night, the 31st. We are going to be talking about oil.
Great. Thank you for that, Uncle Mike, sir. You can now go along your merry way if you have to.
All right.
And next up, of course, Mr. Sebastian, what is coming up in the land of the pit?
Read our blog. Follow me on Twitter @OptionPit.
Don't forget, buy my book.
Buy my book, The Option Traders Hedge Fund.
You throw in a signed, autographed headshot.
I will gladly. And follow along with our content. It's pretty good stuff. Option Insider picks up a bunch of it as well.
We do have quite a bit of it
because it's so good.
It is so good. That's why we do it.
And just check out our stuff. Make sure you are visiting the website regularly. And your two option two option resources should be Option Pit and the Option Insider. If you hit those
then
two,
swing by Options Express to make a trade or two.
Options
and then you're all
Express is
set.
where you execute.
That's where you execute. Once you learn, you go there to execute upon the knowledge that you have built.
Exactly.
Speaking of knowledge, the vast repertoire of knowledge that is Alex Jacobson. Sir, what is last and, as we've established, certainly not least, Alex, what is coming up in the land of Options Express?
Two coming up in-person events. January 26th is Saturday. The crew is up in Minneapolis at the Sheraton Minneapolis West, and they have a big crowd registered. But if for any reason you want to see it and can't make it, we simulcast it now. You can come to the site and do it from your computer.
It's because those Minnesotans have been so ignored for so long in the deep of winter. There's a hunger there. There's a hunger for options knowledge.
Great crowds in Minnesota. Great crowds in Minnesota.
I like people from Minnesota.
February 9th.
Mostly because they're so weird.
You realize everybody in Minnesota is saying, and he's from Illinois.
Yeah.
Where compared to Minnesota, we're the Simpsons, right? We have no budget. We can't pay teachers.
That's true.
Well, I'm not talking. I'm not. You're right.
Two webinars coming up from Options Express.
February 9th, the crew is in Dallas at the Crown Plaza Dallas Market Center. Folks are invited to come, and that one also will be simulcast. So for any reason you can't make it, you can come to the site. And one of the things we're doing on the site now is we're building an archive of all these events and all of our webinars. We've always had an archive of presentations in terms of PowerPoint, but now we're building an archive, a multimedia archive. So folks who can't make it to a webinar or an in-person event can come to the site and see everything. And all this is before the login. All of this is free. So it's not customer only. Everybody's welcome to come to events, and you can see the stuff on the site. Just come to the site, hit the free education tab. The archive isn't up and running yet, but hopefully it'll be up and running this quarter, and you'll be able to hear or listen, depending on your multimedia choices, to everything that we do for the public.
That's what we like to see. We like to see more stuff pre-login so we can get everybody out there.
And I know the guys that are teaching, and they're all really smart guys.
Yeah. Yes. Good stuff going on over there. I'm looking forward to seeing that archive live over at optionsexpress.com. Speaking of archives, of course, you can get all of the archived episodes of this program as well as all the other programs on the Options Insider Radio Network just by surfing on over to www.theoptionsinsider.com. You can find more information on all the topics we discussed on today's show, including unusual activity alerts, some of the breaking news from the options market, and of course, all the archived episodes of the Option Block. So surf on over there. I think you'll like what you find. And of course, last but certainly not least, all of us here on the Option Block All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.